The following video is an extract from the Udemy course, Learn to Construct Financial Statements from the Ground Up. If you would like to purchase the full course, you can do so by using the link below. Hello there and welcome back to this next lesson where we're going to pick up on a concept that we just spoke about there in the previous video, and that concept was the accounting equation. The accounting equation follows the underlying principle that assets are equal to liabilities plus owner's equity. We're now going to demonstrate how the accounting equation is impacted by two transactions. So we're going to do a real applied example here to demonstrate the impact of transactions on the accounting equation. So we're going to go through two transactions and then you are going to have a go at attempting to demonstrate how the accounting equation has been impacted by these transactions, and then I will walk through the solution with you once you have had a go at attempting it. So that's the important point. Make sure that you do take time to pause the video and attempt to demonstrate these exercises. So transaction one, an owner sets up a new company and puts £10,000 of cash into the new company's bank account. And then transaction two, the following day, the owner purchases and receives £5,000 of inventory that the company intends to trade. And then in this case, the inventory is invoiced on 30-day terms, so there's no cash impact immediately. So focusing then on transaction one, an owner sets up a new company and puts £10,000 of cash into the company's bank account. So there's this concept within accounting called double entry, and double entry in accounting states that every financial transaction has an equal and opposite effect, and that effect is impacted on at least two different accounts. So in this case, transaction one, we have got an owner setting up a new company and puts £10,000 of cash into the company's bank account. So in this case, as we said there, double entry has got impacts two accounts. So the monetary amount is £10,000. So in terms of reflecting this in the accounting equation, what you're going to do now is that on a piece of paper, you're going to pause this video in a second, and on that piece of paper, write using a pen, write out the accounting equation of assets equal to liabilities plus owner's equity. And then in terms of the double entry impacting the accounting equation, you're going to then allocate these yellow boxes effectively, this £10,000 amount, under two of these categories to reflect how the accounting equation has been impacted by transaction one. So pause the video now, have a go at that, and in a few moments, once you've had an attempt, press play again, and then I will work through the solution with you. Okay, hopefully you now have had a chance to attempt that. So in this case, we had said a new company was set up and £10,000 of the owner's cash is put into the company's bank account. So what's happened here, the company has received £10,000 into the bank effectively. So that means in this case, from the company's accounting equation perspective, assets have increased by £10,000. Liabilities has not been impacted. So you might recall when I said in the previous video, any transaction between the owner directly with the business is reflected through owner's equity. So in this case, owner's equity has increased by £10,000 in this transaction. Crucially, the accounting equation is still in balance, as it should always be. Assets are £10,000, and then we've got zero liabilities, and the owner's equity is also £10,000. So hopefully you're getting that. If you need to pause and go back, do that before we go on to transaction two, which I'm going to do now. Okay then, moving on to transaction two. The following day, the business purchases and receives £5,000 of inventory that the company will trade. The inventory is invoiced on 30-day terms, so the business doesn't pay for the inventory immediately. It will pay for it in 30 days' time. So in terms of this transaction, the monetary amount is £5,000, and double entry states that every financial transaction has an equal and opposite effect on at least two different accounts. So what you're going to do, you're going to write out the assets, the accounting equation, assets equal to liabilities plus owner's equity. And on a piece of pen and paper then, complete the accounting equation by allocating these £5,000 amounts under the relevant categories here. So pause the video now and have an attempt at that one, and in a few moments I will work through the solution. Okay, so hopefully you now have had a few moments to attempt that, or have been able to attempt that question, that exercise. I'm now going to work through the solution. So we said that the business purchased and received £5,000 of inventory. So the business has effectively received £5,000 of inventory. Inventory is an asset, so the accounting equation in this case, assets would increase by £5,000. In terms of this example, the cash impact was not recognised immediately. What would happen here is that the company has an obligation to pay for that inventory in 30 days time, and that is a liability. So liabilities in this case have increased by £5,000, and in this case there is no impact on owner's equity at the moment. So hopefully you were getting that. If you weren't, have a go at both of those transactions again so you're comfortable with that. And then we're going to, in the next lesson, pick up on some accounting concepts, wider accounting principles and concepts, before then picking up on this accounting equation and taking it a little bit further again. So see you in the next lesson.